Here are the crypto top headlines covered in this video. Arthur Hayes says central banks about to catapult Bitcoin and altcoins to new heights. Here's why. Next, American crypto advocacy movement tops milestone of 1 million supporters. Also, U.S. elections are a huge variable for Solana ETF approval. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Arthur Hayes says central banks about to catapult Bitcoin and altcoins to new heights. Here's why. BitMEX co-founder Arthur Hayes says that a shift in policy from the central banks is about to boost crypto assets into a new bullish phase. In a new essay, Hayes, now the CIO of crypto investment fund Milestone, notes that both the Bank of Canada, or BOC, and the European Central Bank, or ECB, have decided to lower interest rates. Hayes says the moves by Europe and Canada suggest that a global shift in looser monetary policy may be underway and could therefore signal a bump in risk assets once the Federal Reserve in the U.S. follows suit. The June central banking fireworks kicked off this week by the BOC and ECB rate cuts will catapult crypto out of the Northern Hemispheric summer doldrums. This was not my expected base case. I thought the fireworks would start in August, right around when the Fed hosts its Jackson Hole Symposium. That is typically the venue where abrupt policy changes are announced going into autumn. The trend is clear. Central banks at the margin are starting easing cycles. According to Hayes, the new chapter of monetary policy means it's time to go long Bitcoin and subsequently shitcoins. Says the crypto veteran, the macro landscape has changed versus my baseline. Therefore, my strategy shall change as well. For the Milestone portfolio projects who asked for my opinion on whether to launch their tokens now or later, I say let's effing go. For my excess liquid crypto synthetic dollar cash, aka Athena's USD or USDE, that's earning some fat APYs or annual percentage yields, it is time to deploy it again on conviction shitcoins. Of course, I'll tell readers what those are after I have purchased them, but suffice it to say the crypto bull is reawakening and is about to gore the hides of profligate central bankers. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, American crypto advocacy movement tops milestone of 1 million supporters. The United States crypto industry advocacy movement, Stand with Crypto, has hit a milestone in terms of active supporters. On June 5th, Coinbase CEO Brian Armstrong reported that 1 million people have joined Stand with Crypto as advocates for the industry, adding, "That's a lot of voters." He continued to state that 600,000 of these advocates joined after a White House veto threat, and thousands mobilized around the back-to-back historic bipartisan wins in the House and Senate. Crypto is non-bipartisan, and momentum for pro-crypto policy in America has never been stronger. U.S. crypto support grows. The comments came in reference to the Biden administration attempting to block Republican crypto legislation that would enable banks to custody digital assets for clients. However, things have gone in favor of the industry recently, with the House of Representatives voting to pass the bill and the passing of the Financial Innovation and Technology for the 21st Century Act, or FIT21, in May. The Stand with Crypto Alliance, an advocacy organization focused on mobilizing the crypto community to directly engage in the legislative process was launched by Coinbase in August 2023 in response to the increasingly heavy-handed enforcement action from regulators. On June 5th, it surpassed 1 million supporters, with the figure standing at 1,011,058 at the time of writing. It also has had $87 million donated by crypto supporters to further its cause. Commenting on the potential voters in the November U.S. presidential election, Armstrong said it's a much bigger voting bloc than most people probably would have anticipated. Armstrong added that the surge in the group's membership was fueled by frustration over the Biden administration's veto and by strong support for the FIT-21 bill that would create a new legal framework for crypto assets, giving the Commodity Futures Trading Commission, or CFTC, more oversight. Speaking to Reuters, he said, "I think that it's just bad politics to be anti-crypto. There's no voter constituency that you're winning over by doing that, but you are upsetting a huge number of Americans who've used this technology." Big donations for pro-crypto candidates. The crypto industry is spending tens of millions of dollars in this year's elections to boost friendly candidates against those who are against it. On June 3rd, Coinbase announced a $25 million donation to the Pro-Crypto Political Action Committee, or PAC, Fairshake. Other big industry names, including Ripple and venture capital giant Andreessen Horowitz, have also made donations. Our next top headline: U.S. elections are a huge variable for Solana ETF approval. The approval of spot Ether ETFs has opened Pandora's box for another altcoin ETF. Solana, XRP, Chainlink, or Dogecoin could be next, but is the crypto market overly optimistic? The prospect of another altcoin exchange-traded fund, or ETF, in the United States could depend on political changes following the upcoming 2024 U.S. presidential election. This is despite the U.S. Securities and Exchange Commission giving the green light for fund managers to list spot Ether ETFs on May 23rd. Although SEC Chair Gary Gensler admitted that it will take time until the Ether ETFs are launched, speculation about the next crypto ETF has already begun, with Solana's Sol emerging as a top contender. Despite the enthusiasm for more crypto ETFs, Ophelia Snyder, co-founder and president of 21.co, a sponsor and sub-advisor for ARK Invest's Spot Ether ETF, told Cointelegraph that expectations for new altcoin ETFs shouldn't be too high. It's unlikely that the approval of ETH will result in a large wave of approvals. However, as the spot Bitcoin and Ether ETFs demonstrated, high demand for institutional investors for altcoin ETFs could compel ETF issuers to file applications. In an April report, CoinShares, an alternative asset manager specializing in digital assets, found that hedge funds and wealth managers have significantly increased their altcoin holdings, specifically Solana. Snyder highlighted the significant interest in 21.co's Solana Exchange Traded Product, or ETP, on European exchanges, stating that it has nearly $990 million in assets under management. The SEC has not shown any signs of embracing other cryptocurrencies for future ETFs. Approving spot Ether ETFs was already a hard pill to swallow for the Commission. An altcoin ETF may be even more difficult for the SEC to accept. However, a number of different factors could change that. The U.S. elections could be a catalyzer for altcoin ETF approvals. Spot Bitcoin, Ether, and altcoin ETFs exist worldwide. However, U.S. regulators are more restrictive. Snyder remarked that foreign altcoin ETFs do not matter to the SEC, as U.S. regulators have a tendency not to rely on foreign regulators. Bloomberg ETF analyst Eric Balchanis explained to Cointelegraph that the SEC follows a specific timeline for approving ETFs, and if it were to follow it again, it could take years for another altcoin ETF to receive a green light from the agency. One key element that allowed the SEC to investigate market integrity was utilizing Chicago Mercantile Exchange, or CME, data to compare correlation with spot prices on spot exchanges such as Coinbase and Kraken. The analysis used a 32-month sample, which required significant tenure of the asset on CME. Crypto data firm CC Data research lead Joshua DeVos explained to Cointelegraph. With the current U.S. regulatory administrators, Balchanas mentioned they'd probably follow the same process, where a crypto asset must have active futures trading on the CME to track the price behavior. No futures altcoin ETFs have yet been listed in the U.S., suggesting a long wait before the U.S. market might see a spot altcoin ETF. However, Balchanas said there's a huge variable here, which is the U.S. election. The approaching U.S. elections on November 5, 2024, could be critical for the future of altcoin ETFs, with U.S. crypto regulation becoming a political topic. Donald Trump introduced himself as a pro-crypto candidate in reaction to President Joe Biden's somewhat anti-crypto stance toward U.S. crypto regulation. The results could radically change the course for altcoin ETFs, Balchanas noted. If Trump wins, we could see other coins as ETFs, in my opinion. Balchanas added that if Trump were victorious, he could go really liberal on crypto and support it with everything, as he has pledged. In that case, Balchanas said Trump could put in place a new SEC commissioner who doesn't care about the process followed by the SEC in the last few years, where having futures data was a vital part of spot ETF approval process. Additionally, Balchanas believes that Trump's victory could prompt ETF issuers to apply for new crypto ETFs en masse. If Trump wins, I suspect people will test the waters and try all kinds of stuff, or ETFs. On the other hand, Balchanas believes that if Democrats keep on power, it's unlikely there will be an altcoin ETF, even if Biden removes Gensler and appoints another Democrat as SEC chair. The prospects of an altcoin ETF in the U.S. seem highly correlated to the results of the approaching presidential election, and the possibility of an altcoin ETF in 2024 is slim, as the elected president would take office in January 2025. Aside from the upcoming U.S. elections, some specific requirements are generally expected to be met to obtain approval for an ETF. It must offer healthy levels of liquidity, decentralization, resistance to price manipulation, and, if possible, a precise classification from regulatory agencies. Are altcoins ready to meet those conditions? Price manipulation in altcoin markets. The market cap of Bitcoin and Ether is substantially larger than that of other altcoins. As Balchanas remarked, this is a concern for ETFs, as the smaller the market gets, the bigger the chance for price manipulation. With the current status, the altcoin market is prone to market manipulation, as the markets are still very nascent, CC Data's DeVos concluded. However, price manipulation may not be as strong of an impediment as some would think. DeVos noted that spot Bitcoin ETFs were rejected many times in the past due to concerns surrounding market manipulation before the SEC finally reluctantly approved them. Balchanas said that ETFs could handle some price manipulation. Just because there's a little price manipulation or the price moves and swings a lot doesn't mean you cannot have an ETF. For example, he said that a couple of active ETFs have GameStop as their biggest holding, and that although there has certainly been GameStop stock price manipulation, the ETFs are still active. Can ETFs back a crypto asset with low liquidity? Another issue is that altcoin markets lack liquidity due to their lower volume than Bitcoin or Ether. Sebastian Hein, Chief Risk and Compliance Officer of institutional staking partner NorthStake, told Cointelegraph that he believes an altcoin needs a large market cap and significant daily trading volume to justify an ETF. However, Balchanas explained how an ETF can exist without much liquidity. He noted that the existence of junk bond ETFs, where even the biggest ones don't even trade every day. Therefore, if junk bond ETFs exist, why not an altcoin ETF? Although ETFs with low liquidity may exist, this factor can represent a problem. Balchanas explained that the main issue in a market with low liquidity is the appearance of premiums and discounts. This is not beneficial for the ETF, as it may offer a different price than the actual asset. At this point, market makers could help to avoid these arbitrage gaps. Alexis Sirkia, the founder and former CEO of market maker GSR, told Cointelegraph that market makers shouldn't have any difficulties ensuring liquidity in the most mature altcoin markets such as Solana. Additionally, the appearance of an ETF would attract market makers from other markets, leading to an overall improvement in liquidity in the market. In the case of altcoins with smaller markets, lower liquidity metrics could be insufficient for a unique ETF. Therefore, a basket of altcoins could be an option. Justin DeAnthony, head of business development at market maker Keyrock, believes they'll have to batch multiple altcoins to have one substantial ETF. He believes there could be an Ethereum Layer 2 ETF or maybe even a meme coins ETF in the future. However, investors don't seem to favor altcoin baskets. Snyder said that 21.co has detected more demand for single asset trackers than for altcoin baskets on offer. Additionally, she explained that an ETF with a basket of altcoins is unlikely, as ETF wrappers in the U.S. will likely require additional regulatory engagement. Is a Solana ETF likely? Snyder said that Solana is the leading contender for the next altcoin ETF, as it has the highest market capitalization compared to other altcoins. However, Solana has an issue with centralization. DeVos explained that the scoring metrics used for their crypto ESG benchmark index evaluated decentralized metrics, including the percentage of coins in the top 10 Solana wallets, the Nakamoto coefficient, and the type of governance system. Decentralization score from January 2024. Solana doesn't break the top 10 in CC Data's rankings for decentralization. DeVos said that the top 10 Solana holders hold 7.29% of the supply and play an essential role in price action. The high concentration of wealth among a small number of wallets is not solely an issue for Solana, it's a common problem for altcoins. Data from CC Data showed that the top 10 wallets own 5.58% of XRP, 4.88% of Stellar Lumens, and 3.9% of Chainlink's Link. Basil Ismail, the CEO of investment analytics company BlockCircle, told Cointelegraph that Solana enterprise validators received the most support from a small group which, if they colluded, could manipulate the network. Ismail also noted that Solana has previously suffered several outages that halted trading without any indication of when the blockchain would come back online. He said this issue must be solved before any ETF could be considered. If current regulators are not changed after the upcoming election, a spot Solana ETF will face significant barriers. The SEC has directly labeled Solana as a security, which makes it very unlikely for a spot ETF to be approved until clarity arises on their treatment, said DeVos. Solana has the market cap and volume to justify an ETF, but like other altcoins, it may need to improve its fundamentals to overcome current U.S. regulatory requirements and become a viable ETF option. So this concludes Crypto Top Headlines. If you haven't already done so, Don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.